Buying a home in 2023 is going to look a lot different than years past. Everything from inventory to inflation to the number of homes selling to house prices is going to be different. And in today's video, we're going to give you some 2023 real estate projections, where I see the housing market going. Now, I want to be really clear. These are my projections. Last year, I was completely wrong when it came to interest rates. But one thing I have nailed over the last couple of years, ever since the start of the pandemic, is house prices. The idea that housing was going to continue to do well. And in today's video, we're going to talk about what I see for 2023. So if you're a buyer, seller, investor out there, you have an idea of what's going to happen in the real estate market so you can make the best decision for you. Now, I want to start today's video by offering a suggestion, if you will. If you're planning on buying a house in 2023, the best thing you can do is not pay attention to the media, not pay attention to the headlines. And the primary reason for that is because most of the information that's going to be coming out is going to be bad news, especially compared to year over year. What you have to understand when it comes to housing data is that it's lagging. And in many cases, it's lagging by 2 to 3 months, which means the data that you're getting now is actually about 3 months old. And on top of that, it's compared year over year in many cases. So when you had a blockbuster start to 2022, like we did last year, and then you get the data coming out for 2023 in those same months, it's going to look really bad because 2022 was such a strong start to the year. So just understand, when you're looking at that data, the world isn't falling apart. The housing market isn't crashing. It's not collapsing. It's just likely showing a slowing year over year, which is to be expected. We're coming off 2 of the hottest years in real estate that most people have ever seen. And as things start to slow down, as we've seen they already have, with the number of homes selling, with prices dropping in some areas, the media, a lot of people out there, the doom and gloomers, want to make it seem like the world's falling apart, when in all reality, that's not what's happening. But I want to spend today's video and actually talk about my expectations for the 2023 real estate market so you can make the best decision for yourself. But one last thing I want to ask before we dive into that is that you hit the like button and feel free to subscribe to the channel to stay updated on everything real estate related. The first prediction I want to start with for 2023 is the number of homes selling. In fact, the National Association of Realtors just came out and said that they're expecting 4.78 million homes to be sold in 2023 compared to 5.12 million in 2022. And while I don't personally have an exact number of homes that I expect to sell in 2023, I do know the number is likely going to be less than 2022. And the reason for that is because of interest rates, because of housing affordability. There's less people out there that can afford to buy homes at the current prices. So unless you see a big drop in interest rates or a big drop in house prices, you're not likely to see the number of sales increase substantially. And because most homeowners out there have equity in their property, many homeowners out there have locked in super low interest rates, you have a lot of sellers that are more or less locked into their properties, and unless they have to do something, they're likely going to stay put, because buying another home is going to not only cost more money to purchase that home, it's also going to cost more on the monthly payment because interest rates are likely higher than where they purchased their original house. So the number of transactions actually taking place is going to be quite a bit less in 2023. The next prediction I want to talk about is interest rates. Now, many of you know I got interest rates completely wrong last year. I didn't think we would see interest rates go much higher than about 4%. And this was at the beginning of the year, before inflation had really ramped up, before we had the war between Russia and Ukraine and the issue with oil prices and everything going on. But the reality is, I was wrong about my prediction with rates. And because of that, many of you guys have pointed it out to me, made me fully aware of it, and I'm okay. I'm okay admitting it. But what I expect this year with regards to interest rates is I do expect interest rates to come down. As of today, interest rates are sitting somewhere in the low 6, mid 6% range, with core inflation sitting somewhere around 6%. And I do expect inflation to come down as well. Over the next 5 to 6 months, you're likely to see inflation numbers report substantially less than are currently reported on this chart here. And because of that, you're going to see inflation go down. And as we've talked in the past, as inflation goes down, interest rates are likely to follow. So while the Fed out there has expected that they're going to continue to raise the Fed funds rate upwards of somewhere around 5.1%. Much of that has already been baked into the cake with regards to interest rate traders. So unless you see some huge spike in inflation where numbers are coming in way higher than reported, you're not likely to see a big change in interest rates. As we've talked in the past, volatility in the market is what creates these big swings with regards to interest rates. So when the market reacts accordingly to what people are expected, things react pretty smoothly with regards to bond prices, with regards to interest rates, and I expect that to continue. With that said, I think you'll see interest rates in the fives by the end of the first quarter. Now, does that mean they're going to be sitting at 5%? No, I'm not suggesting that or predicting that at all, but I do think you'll have some people out there with good credit, with good down payments, getting 30-year fixed mortgages in the 5%, locking loans for 30-year fixed with a number that starts with 5. And I also believe that the Fed is likely to pause interest rate hikes somewhere in the first quarter of 2023, as long as inflation numbers continue to go down. So what does that actually mean for house prices? Well, my third prediction is that housing is actually going to remain somewhat stable across the nation. Now, I'm located here in Orange County, California, which is Southern California. We're in a different market than a lot of places across the nation, right? We did see a lot of appreciation over the last couple of years, but we didn't see the same appreciation that a market like Phoenix or Boise or Austin, Texas saw. And on top of that, we're not a market that has a lot of new construction, whereas those markets are. So those markets that appreciated the most, those markets that have a lot of new construction that's currently under construction that will be hitting the market in 2023, those are the markets that are likely to see the biggest dip. But even with that said, I don't believe you're going to see a housing crash in any of the markets that I mentioned. On top of that, what I will say is that if interest rates do go up for whatever reason, if I'm wrong about rates and inflation goes up and interest rates go up and the Fed gets more aggressive and hikes the Fed funds rate more than what they've said they're going to do, then I believe that will hit house prices in a negative way. So if you're somebody out there that believes all of that is going to happen, then yeah, you might expect housing prices to continue to decline. Now, I'm not one of those people that actually believes that. I believe that inflation is going to come down. I believe with that, interest rates are going to come down. I believe the Fed is likely to pause on their Fed funds hikes and even potentially pivot towards the end of 2023 as the employment data likely disappoints somewhere around middle of the year. So with all of that said, I believe that the market will likely remain stable with regards to housing prices, which means in some markets, you could see somewhere between a 5 and 10% decline, whereas some markets might remain pretty stable where you don't see a decline at all, and some markets might see a small incline. So I think for the majority of people out there, you're likely to see the prices of homes go down a little bit, but nowhere near a number that you would consider a crash. Now, remember earlier in the video when I said don't pay attention to the media and what they're reporting? Well, when it comes to house prices, that is one area that you should absolutely not pay attention to when it comes to what they're reporting, because again, they're using year-over-year data. And for many markets out there in the US, May of 2022 was the peak for many markets out there. So as the media out there continues to report on the median home price, it's going to look really negative, especially when you get into May of 2023, when they compare the number from May of 2022 to the data of 2023. While we don't even know what's going to happen in the first quarter of 2023, I can tell you year over year, it's not going to report well, and that's just based on the way that they actually report the data. In fact, much of the declines that are going to be reported in those numbers have already taken place. So I guess what I'm saying here is just don't get caught up in what the news is reporting. Look at the context, look a little bit deeper to make sure you actually understand what the market is doing so you can make the best decision for yourself. Now, the fourth thing I want to talk about in today's video is inventory. When is inventory going to pick up? What's going to happen with inventory? Well, as we start the year, it's typically going to be the lowest numbers that you're going to see that year because inventory generally grows as we head towards the middle of summer, at which point kind of peaks and then starts to tail off as we move into the end of the year. So with that said, as we start the year, inventory is going to continue to build. Now, I don't expect most markets out there to get a flood of inventory as soon as we start the beginning of the year. Typically, you don't see the market start to heat up until somewhere right around the Super Bowl, first or second week after that. So maybe mid-February, you'll start to see homes come to the market, and you're likely to see that trend continue through the middle of summer. Now, the one caveat to that is that if interest rates stay high, they stay where they are right now, say somewhere around 6.5%, you're not likely to see a huge amount of inventory come to the market because of the things that we've already mentioned. Now, it's going to increase because historically that's what happens. Seasonality wise, we always get more inventory in the spring. But with that said, as we mentioned earlier, many sellers out there are locked into their homes and not going to be selling their properties unless interest rates come down a little bit, making it more attractive to buy another property. So if you do see interest rates come down somewhere in the low 5% range, that could actually stir up more inventory coming to the market, because there's some people that are in properties right now that would be sellers if the payments made sense, if they found the right property out there. So if interest rates come in lower than what I'm talking about in this video, that could actually generate more sellers willing to put their property on the market, and in turn adding to inventory. But with that said, I think inventory is going to continue to grow regardless, because you're going to have homes come on the market, and because of housing affordability, because of a drop in buyer demand, there's just going to be less people out there shopping for homes, less people out there willing to purchase these homes, and these homes are going to sit on the market. And as new people come to the market, new sellers put their homes on the market, that's going to continue to add to those numbers, and inventory is going to continue to grow. Now, a lot of that has to do with how a seller prices their home. Many sellers out there, as you guys know, think their home is worth more than what it's actually worth. So those sellers that overprice homes, those homes are going to sit on the market longer, days on the market are going to go up, and that's going to cause inventory to grow at a faster rate versus sellers that put their homes on the market at fair market value. Typically speaking, even right now at the end of December, the homes that are priced correctly are still selling in most markets out there. So I wouldn't expect inventory to grow substantially if people price their homes correctly, but from experience, I know that there's going to be a lot of overpricing in the market, a lot of sellers out there just testing the market to see what they can get, and because of that, inventory is going to grow. Now, with that said, I think you'll see inventory peak sometime around mid to late summer. I think the inventory levels will be higher than they were this past year for most markets out there. There's going to be more property on the market for the things that I just mentioned. There's going to be homes sitting on the market and not selling because of the things that I just mentioned, but I don't think you're going to see a huge amount of foreclosures, a huge amount of distressed properties, a huge amount of short sales coming to the market for most major markets out there. So most of the homes coming to the market, these sellers are likely going to have some equity in their property. They're likely going to be sitting on low interest rates. So unless they're in a position where they have to do something, they're going to be waiting for their number. And if they get the number, they're going to sell. And if they don't, they're likely going to either sit on that property or end up pulling it off the market. The last thing I want to talk about with regards to inventory is new construction. If you're in an area that has a lot of new construction, has a lot of properties that are under construction that aren't built yet, and these properties aren't under contract, these are going to be the best opportunities for buyers out there in 2023, because builders aren't in the business of holding on to property. They're not in the business of managing property. So, if you're in one of these markets, it might be an opportunity to get a deal on one of these. But at the same time, also understand hedge funds out there are still buying property. And as we've seen recently, some of these builders are looking to unload entire developments, entire portfolios to these hedge funds so that they can turn them into rentals. So at the end of the day, you can't 100% count on a builder just giving you a huge deal on a property, but many builders out there are going to work with you in the form of seller credits, in the form of potentially a lower price, seller buy downs, whatever it is, design credits, in order to get you to buy these properties. And one of the final predictions I want to talk about in today's video is demand. What's going to happen with buyer demand? Well, at the moment, we know buyer demand has stalled because of affordability, because of where interest rates are. But as I mentioned earlier in the video, I think interest rates are going to trickle down. And as interest rates trickle down, you're going to see more demand added back to the market, because housing prices are likely going to stay the same, go down in some markets out there. So it's going to get more affordable to buy these properties. Is it going to be like 2019 or 2020 for most people? No, it's not going to be that, because you're not going to see interest rates in the low 3s, high 2% range. And you're not going to see prices at the prices from back then either, but it is going to get more affordable. So as it gets more affordable, I think you're going to see more demand come to the market. But as we start the year, demand is going to be slow, because interest rates are still going to be sitting somewhere around 6% like they are at the moment, and buyer demand doesn't typically pick up until mid-February like we mentioned earlier. But as we head into the spring market, you're going to continue to see demand pick up like it always does, but it's not going to be like years past. It's going to be a slower market than what we've seen. It's going to be less competition competition out there, but it's going to be more stable. It's going to be a good time to buy a property if it's the right time in your life. And as I've said in past videos, it's not always a great time to buy a property, and 2023 is going to be one of those years where you have to be a little bit more careful because of where the market has appreciated, because of everything going on with the economy. There's a good chance that you're going to see housing move sideways for a couple of years. So you just have to make sure if you're buying in 2023, you have that longer term time horizon, you have money in the bank, you're comfortable with the payment, in addition to having some job security. But I'd love to know your thoughts. Where do you see the housing market going in 2023? Do you see housing prices plummeting? Do you see interest rates plummeting? Or do you see interest rates going to 10%? Housing prices going down? Where do you think the market's headed? I would love to know, so do me a favor and leave it in the comments below.